This is Market Moves.
Hello and welcome to Market Moves. Today's star performer on the 200 is Mesoblast, which rose 9.6%. And the day's worst performer is Cenex Energy, which fell 7.3%. More on them later, but first let's take a look at the share market. The S&P ASX 200 closed up 2.5% at 5,338 points. To the performance of the different sectors, all sectors well into the black. The industrial space saw the best gains, up 3.3%. Materials also up strongly with a 3.1% gain, and financials gaining 2.5% today. 168 stocks rose today, while 25 fell and 7 held steady. And looking at the biggest movers in terms of index weight, CBA led the market higher, up 12.4 index points. BHP also stronger with a rise of 12.1 index points. Westpac, NAB and ANZ also making the list today. And the biggest drag on the market by index weight, APA Group fell 0.2 index points. Sirius Resources also weaker, down 0.1 index points. And Cenex Energy, Sky City Entertainment and Worley Parsons rounding out the bottom movers by index weight. And here to take us through what's moving markets and why, Michael Kodari from KOSEC. And you too can join in the conversation with a question or comment by emailing us at yourmoney@skynews.com.au or by using the hashtag MarketMoves on Twitter. Welcome to the show, Michael.
Thanks,
a very good day for the share market. The Santa rally is well and truly happening.
That's right, that's right. Looks like Santa came to the market today. So, we had a great day. A lot of the stocks that we held, we had Cochlear go up 3% today, Certex. So a lot of the healthcare companies doing great. We had a lot of resources, energy stock going up too. But, it's interesting on the back of what the Federal Reserve said, that the market's starting to rally now. So this is what we've all been waiting for.
So what has brought this positive sentiment on?
Look, I mean, the Fed meeting last night saying that they sort of rephrased and said they're going to keep interest rates and watch them month by month. It has had a big effect. So, the fact that interest rates will remain low is a great thing, and more money going into and stimulating the economy. So, for us, I guess the challenge with us is, consumer confidence. We've got retail sector, mining, gas and oil. So there's a couple of issues there, but this is what we've been waiting for, the market to have a rally, and hopefully this rally continues.
Now, all sectors performed really well today, including the retail space. Given what consumer sentiment is like at the moment, would you say that this is short-lived?
Look, it's interesting. I mean, a lot of stocks have gone up today, regardless of what sectors they're in. But you've got to be very cautious. The retail sector's got its problems. One of the major problems is consumer confidence. Our saving ratios are very high, so we tend to save a lot. We don't have the confidence to spend as much, and that's not good for the economy. So if interest rates do come further down and businesses have more confidence, it's great for retailers. But the other thing also is our wages haven't gone up in the past couple of years. So, the more people get paid, the more they spend money, and the more confidence they have, they save less. And, it's good for the stock market. It's good for those businesses.
Now, oil prices dipped again overnight. What do you think is going to happen to the price in the new year?
Look, oil is a very interesting one. A lot of heavy, large investors overseas, have been saying, if oil comes below 60, these companies are on the verge of collapsing. So it's very hard to make money. Again, price takers. A lot of oil companies are struggling. They need more capital to keep going. What happens now is they'll be cutting a lot of costs. And these sort of things don't get publicized because a lot of their workers are contractors. So, I'll be staying away from a lot of the oil, gas, mining companies because, supply and demand is what determines the price. And, we've got the Saudis. Saudis are saying they can produce gold at $15 a barrel. So if they're producing it at 15, it's still at 60. That means that what they might be trying to do is get rid of a lot of the competition out there by being much more cost effective.
So you've kind of touched on some sectors that investors should avoid next year. What should they keep their eye on and consider investing in?
Yeah, look, our dollar's at about 81. It's expected to come further down. So if the dollar does come down, unfortunately, retailers tend to import a lot in. Now, you won't see this up until January, February. A lot of these retailers have already set the price for their stocks. So you want to be in companies that are reporting in US dollars. In our economy, I guess, healthcare, we've got a lot of baby boomers. We've got an aging population. Healthcare tends to continue to do well. So I'll be looking at companies that have their major the services or the products being sold overseas. So they're reporting in US dollars. You've got companies like Cochley, you've got Certex, you've got CSL, you've got Ramsay Healthcare. A lot of these healthcare businesses are the solid ones to stick to.
Okay, well, let's take a look at some of the highs and lows of today. The market hit a high of 5,343 and a low of 5,229. Around 1.4 billion stocks changed hands, worth around $9.4 billion. And in terms of stocks by volume traded, Linus was the most traded stock today with 102 million shares changing hands. Telstra also heavily traded with 70.8 million shares exchanged. Arium rounding out the top three stocks by volume traded. Now let's take a look at some of the top movers on percentage change on the All Ords today. Now let's check the top performers by percentage change on the ASX 200 today. The best performer on the market was Mesoblast. It rose 9.6% today, finishing at $4.44. The second best performer was Ardent Leisure. It also rose 9.6% today, finishing at $2.97. And rounding out the top three, Covermore rose 9.3%, shares ending at $1.99. And rounding out the top 8 performers today was Mineral Resources, Lynas, Alumina, Liquefied Natural Gas and UGL. So, Michael, a really good day for Mesoblast, up almost 10%. What's prompted this?
Look, there's no announcements that have come out. So a lot of the stocks have done really well today on the back of what the Reserve Bank said. I think you've got to be very cautious. A lot of these companies have been oversold, and the market's had a great day, and a lot of these companies are picking up. So you've got to be very careful. Again, this was a stock that we looked into about 6 months ago. It didn't sort of tick our boxes in terms of being financially healthy, having a high return on equity, low debt, being in the right sector. So we tend to, you've got to get back to the fundamentals, and investing in the right sectors of the economy is one of the most important things to do right now.
Now, Covermore also had a really good day, which makes for a nice change from yesterday when it actually dropped and was one of the worst performers along with Flight Centre. How do you think this company is going to fare next year? And at the same time, we can talk about Flight Centre.
Yeah, look, Covermore, it's been an interesting one for the past 12 months. We've been tracking this stock very closely, something we didn't get into because then again, if you're investing in a business, you want that business to return at least 12 to 15%. So what I mean by that is if you put $1 into that business today, you want that business to generate $1.12 or $1.15. The bank's giving you 3.5%, 4%. A lot of these companies that don't have a high return on equity is something that we stay far away from. Flight Centre's been a good one. They've done extremely well. They've come out with their downgrade of 4%. They're saying things are very tough. People aren't traveling as much. They've got to be much more competitive in terms of their pricing structures. But then again, I think it's got a good model, Flight Centre. It's been hit quite heavily in the past couple of weeks. It's not something that we're investing at this stage. We were in Flight Centre. We started buying Flight Centre at $17. We sort of exited at a high, and now we are getting back into a lot of the healthcare sectors. So Cochley was one of our biggest one, which is up 3% today.
And Beach Energy has also had a good day, which is surprising given what's happened to the oil price overnight.
That's right. The oil prices, if oil goes below $60, it's very hard for these companies to be competitive. A lot of them will go out of business. If oil is at $140, $150 a barrel, things are great. Again, you need a lot of money to be in production. A lot of businesses that are not producing, they'll struggle. In the UK, a lot of these companies are going bankrupt. So, now from now to the next 18 months, you see a lot of people losing jobs, and the oil and gas sector struggling. So, I'll be staying far away from any energy company at this stage.
Well, some good advice. After this short break, we'll take a look at some of the bottom movers of the day. Welcome Welcome back to the program. Now for a look at some of the bottom movers, starting with the All Ords. Now to the bottom performers on percentage change on the ASX 200 today. Senex Energy had a shocker on the market, down 7.3%, shares closing at just 32 cents. The second worst performer was Medusa Mining, down 5.3%, shares finishing at 62.5 cents. And rounding out the bottom three, Resolute Mining lost 4.4%, shares closed at 21.5 cents. And rounding out the bottom eight performers today was Sirius Resources, BC Iron, Sky City Entertainment, Southern Cross Media and Singapore Telecom. Senex is taking measures to protect oil revenues amid the current price volatility, securing a floor price for sales from January to June next year. The hedging guarantees an average Brent crude floor price of $68 a barrel for 720,000 barrels during that period. Senex is also reviewing spending for next year and has already moved to decrease discretionary expenditure. Managing Director Ian Davies says the company remains in a financial strength position and is managing downside risk out of prudence. So not a good day for Senex Energy, Michael.
No, very tough. A lot of these companies in the energy sector will be doing it tough. That's what my predictions are. I've said it a week ago, 2 weeks ago, 3 weeks ago. I've said it for the past 2 years. I don't see the logic behind investing in a business that's a price taker, and the fact that there's so much capital that's required with a lot of these. They're very capital intensive. So investors get sold in a story, and the fact in the stock market is you always have to come back to the fundamentals. I mean, we exited the mining services sector 2.5, 3 years ago, and regardless of how good a business is or how much contract it has, if the sector struggles, all those businesses go away too, which is exactly what's happening in the oil sector now. A lot of those companies that are servicing the oil sector are now struggling too.
And now also a really bad day for gold stocks by the looks of it. Medusa Mining down 5.5%, and Beetle also had a terrible day. What do you see happening with the gold price in 2015?
Look, I mean, today a lot of the gold producers were down. The market's up. If there's confidence in the market, people tend to, move away from gold. So gold has always been a safe haven. The logic behind gold is interesting. Warren Buffett used to say gold is something you dig up from the ground. You put it in a safe and you have guards around it. So really, it doesn't produce anything, but it's always been a sort of measure of wealth. But with the economy improving, I mean, things are not good, but they're not that bad either. So now's the time where the government's, the RBA is trying to stimulate growth in our economy, and things like gold, what investors are staying away from. So I think the best place to be is in the stock market, in the right companies.
So do you think investors should stay away from gold? Is that what you're saying?
We haven't touched gold for a long time. We haven't placed a single trade in gold for the past 2 years. Medusa is an interesting one. They used to produce gold at $250 an ounce, a very cheap gold producer. But then again, gold prices aren't doing very well, like oil, like iron ore. So it's very, very tough.
Well, I think that sums it up. Stay away from it, perhaps. Let's take a look at how the market fared this week. The S&P ASX 200 ended at 5,338, which is 2.3% higher. The best 5 performing stocks for this week were Lynas, BC Iron, Senex Energy, UGL and Sundance Energy. The worst 5 performing stocks for the week were Medusa Mining, Flight Centre, Beetle Resources, Resolute Mining and STW Communications. Now let's look at some of the day's upgrades and downgrades thanks to FN Arena. Deutsche Bank upgrades Challenger Limited to a hold, upping the price target by 25 cents to $6.25. The Department of Social Services has done a backflip and now retained favourable tax treatment for Challenger's care annuity retrospectively. Both the company and DSS are working together on an alternative for the future. The broker has made small upgrades to forecasts. They now see downside risks as limited, but risks remain regardless. They specifically point at low free cash flow generation given high capital intensity. Credit Suisse upgrades Flight Centre to an outperform, cutting the price target by $1.50 to $48.50. The analysts admit the share price may well weaken further in the short term as a consequence of Flight Centre issuing a profit warning yesterday, but they think the share price at current level is still compelling. The broker's positive view, longer term, is predicated on the thesis the company is at present simply a victim of sagging consumer confidence in Australia, not because of a structural change in its market or business positioning. And Morgans upgrades Origin Energy to an ad cutting the price target by $1.12 to $13.40. To take account of all price falls, the broker has reviewed its Origin forecast business by business and come to the conclusion the sell-off has been overdone. Confidence has been shattered just as it was building with the AP LNG first gas at site, the broker notes. OK, Michael, so do you agree with Flight Centre? That's been upgraded. I know we touched on it previously. You seem to think that despite the profit downgrade, it is a good stock.
Well, with 4% downgrade, look, the model is very good. It's a sort of a business that I like. Why? Because if you're looking to book a holiday or go on a flight, they've got those retail stores you can walk into. They can package anything up for you. So people want things that are very simple and easy. And Flight Centre, it just makes things very simple for you. Someone that can guide you, tell you exactly where to go. Although one of the biggest problems is, with flight and travel, if people don't have confidence, you see the sort of things that have happened the past week. If there's major plane crashes, they affect people traveling. So the more discretionary income people have, the more they go out and spend and, go to Flight Centre to book a flight. So, it's a good business. Obviously, lately it's been very competitive. They had to sort of bring down their pricing and the packages that they give. But, long term, like anything else, people do travel. People need to stay in hotels. They need travel packages. People do need telcos. People do need hospitals. And just like every stock out there, if it's something that the consumer needs, we are investing in it.
Now, Challenger Limited has been upgraded to a hold from sell. Do you agree with that? Look,
Challenger is an interesting one. With the amount of self-managed super funds growing, with the ageing population, Challenger's got quite a good model. Recently with the Department of Social Services and them having a look at their product and then reversing it, it's had an effect upon the share price. But long term, Challenger's done very well. Out of a lot of those financial firms, the funds management firms, it's one of the outperformers.
And Origin Energy has been upgraded to an ad.
Yeah, I mean, Origin's had its, its missed guidance. It's an interesting one. Again, a price taker. It's very hard to be in businesses like this.
OK. Well, now we have time for a viewer email. Kim writes, "Hi, can I have a view on Woolworths? It seems cheap at the moment. Is this a top 10 stock?" What do you think, Michael?
Well, the biggest question is, how do you define a stock is very cheap? Everyone's got the different valuation methods and strategies, but the best ways to observe, if you go to a Woolworths store, observe and see, the way things are structured. If you go to a Myer store, you can observe and see the difference between Myer and David Jones. Again, the same thing. One of the biggest problem Woolworths is having is competition from companies like Aldi that are coming in. So these businesses, Woolworths might have 10 different brands of the same sort of product, whereas Aldi has one. So, but it buys in large volumes, so they're much more competitive. So, again, I'm not saying Aldi is going to replace Woolworths, but then they do take away market share.
So how would Woolworths, say, compare to Coles or Wesfarmers stock? Would you pick one over the other?
I mean, the problem is Wesfarmers got Bunnings. Woolworths try to expand into that section with Master Food. They've had problems, right? But, they are a quality business. But the only problem is they're losing market share. They've had a bit of teething issues in terms of their expansion plans, which is why the stock price has dropped. But then it comes back to what's Woolworths' valuation? How much should you be paying for it? It's not something we hold at this stage, but then again, people always need to go shop for groceries, and you either go to Woolworths or Coles or Aldi. So, my pick still is Woolworths.
And while we're talking about that retail space at the moment, jewellery retailer Lovisa had their IPO yesterday. They've done relatively well. Yeah. How do you think they're going to go in that specialty space next year? I mean, they have something like 220 jewellery stores across Australia and Asia.
Yes. I mean, look, one of their, investors is the same investor for Domino's Pizza. He's a very clever fellow. He's investing in this business because of the model that they have and their costing, in terms of how they've structured within the market. They're set to grow and expand. It's a business area where you've got to be very careful. The whole retail sector, it's a tough one. For me, it's not something that I'm investing in or we're advising our clients to get into that sort of business. We like a business that has a track history. A lot of these IPOs, they come out. I mean, this stock's, I think it's trading at $2.16. It's up today, but it'll be interesting to watch it in the next couple of weeks or months to come. Usually, a lot of IPOs, do quite well in the first couple of weeks, and then, the sort of attention goes away. People start selling down. So a business with a good track history is much safer to invest in than a business that's just coming up.
And obviously, oOh!media did their IPO on Wednesday as well. They're in that outdoor advertising space. How do you think they're going to go? Oh,
look, it's interesting. Yeah, they've done well before, but, it's one that we're watching very carefully. Do I value it at the current price that they're trading at? I probably wouldn't be buying now, but I'll be watching that business very closely to see how they go. For me, I'm all about healthcare. Every stock that I've recommended, Cochlear was my last one on TV, and again, that's up too. So, I like the healthcare company. I like the telcos, TPG Telecom. I still like those businesses. So, and they've done very well for us. So the market's down this year. All those stocks are up, and that's what we like.
So you've talked about a few that you do really like. If you could pick one and tell the viewers what you would pick for the week, what would it be?
Excellent. I mean, the viewers, I don't know if they watched me, but they would have remembered I recommended Cochlear about a month and a half ago. Again, why do I like Cochlear? A lot of their earnings are coming from the US, so that's where a large part of the market share is. So the falling Australian dollar is going to help a business like Cochlear. They're coming with a new product called Nuclear 6, so that should be released at the end of this month or early next month. So I expect big things from Cochlear, and being in the healthcare sector, which is growing, so everything's for you. Nothing's working against you in a way.
Great, thank you, Michael. That's all we have time for on this edition of Market Moves. A big thank you to our guest host Michael Kodari from KOSEC. I'm Carolyn Herbert from the team here. Thanks for your company.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.